Acura's all-new ADX, a compact SUV that isn't just built for one thing. It's precision crafted for everything. To escape the grind with available all-wheel drive. To go with your flow with available Google built-in.
Hey Google, turn it up.
Okay, turning up the volume. And crafted to be heard with an available Bang & Olufsen premium sound system. The all-new Acura ADX, crafted to match your energy. Acura, precision crafted performance.
Take your vibes and go, 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 go.
Google is a trademark of Google LLC.
Reality radio for a really great future. We're talking real money.
You understand that life requires money. You know that. That's why you have a job. But there will come a point in life when you'll need more than just the money that you've saved from your job, and you're going to be without an income except for Social Security. And that's why we're here to help you build the wealth you need to enjoy your life the way you're going to want to enjoy it. And you can call us for help with money, investing it, or anything to do with it at 855-935-TALK, 855-935-8255. The show's called Talking Real Money. I'm Don McDonald, and my co-host over there, Chuck, and hi. Welcome to another hour.
Yeah, one of your last hours until you head south.
It almost sounds like you're expecting me to not make it back.
Yeah, I don't want to say that.
It's Don's last hour.
This is it. This is really it.
On Como.
No, I don't think I said it like that. I think I said one of your last hours. I think I said it more on the upbeat.
From here, it sounded a little depressing.
I can see how you might find it depressing, but we do not. We'll move on.
We do not.
We are thrilled, on, my friend.
We'll make it without you one way or another.
Don's finally going to get a vacation, and I got to say, as your business partner for darn near almost 10 years now. I mean, well, we worked together before in another business, but almost 10 years in this one.
It's 9 years now almost for Vestry. In the fall, it'll be 9 years.
I know. And I'll say
wow, time flies when you get old.
And you have basically worked the whole time. I mean, you've kind of gone on a few trips here or there, but I
work when I'm gone.
I hope you'll actually disconnect. I really do. Maybe do something unusual.
I plan to partially disconnect.
I think it'd be good.
Because someone still has to put the podcast up on the web.
That's true.
That'll be me.
Okay.
And but I'm going to take a hiatus from the Money 30 features.
Which have been very popular.
They've been really popular.
Yeah,
Let's see where we rank on Apple
if you haven't heard these,
Podcasts.
so one of the issues we face online is, and our podcast has done very well for a long period of time, but
yeah,
I think it should do better when you listen to the other stuff out there. But I know a lot of you are busy and you got this going, you got that going. I don't have that much time. Well, Don has taken these wonderful features he does every single day. Have you ever even had a repeat feature in like 5 years?
Yeah.
Okay,
yeah,
but
I've repeated
many.
some.
I've
repeated some.
This is new. It's good information, and you've turned it into a thing called Money 30. You actually spell out money and the word 30.
The word 30.
Not numerical.
Yeah, Money 30. And the reason for the name is that 2018 is my 30th anniversary of doing a financial talk show.
That's a long time.
I've done financial talk since 1988 on Business Radio Network back then.
Okay, but you really want to feel old. I've been on the radio since 1974. Not just doing financial talk, but...
I went over and volunteered, but I swept floors at a radio station in 1974.
I think I remember handing you the mop, actually, so thank you for doing that.
That was across the street from my high school in Colorado Springs.
So anyway...
It's a top 40 station. You know what was great about that station, though?
What about it?
Is that I could, because I was volunteering over there, they didn't pay me. I just liked radio.
Like the rest of the business.
Yeah, it's radio. But they paid me in cutouts.
In what?
Cutouts. Do you remember cutouts? Cutouts were albums that they would get from the record companies.
Of course, yeah, right.
And they would punch a hole with a hole punch in one of the corners of the album so that they couldn't be resold.
Yeah, right. Yeah.
They were cutouts.
Promotional.
And I was doing my high school radio station, which actually was just a microphone and some speakers in the hall.
Of course you were.
They called it a radio station.
Yeah.
And I was one of the first people to play Roundabout by Yes on red vinyl.
Wow.
Red vinyl.
Wow, and I don't want to brag, but I'm going to see Yes in about 2 months live.
Are they still alive?
Well, that was my general take when I got the tickets.
I mean, I'm thinking
I know.
they were all
Getting
grown
kinda
men
old.
when I was in high school.
I know, yeah. Well, they were 10 years ahead of you. So,
Is it
well,
still John Anderson?
Yeah.
With
I
his
believe
really
so.
high voice?
I know. I love those guys. So they're playing
I did
nearby, so we're going to go see them.
Really? Yes. Where are they going to be?
At the winery.
When is it? I'm going to come out.
Middle of June. You're welcome to join us.
I should fly out for
it's
that.
gonna be fun.
I've got a companion ticket for Deb.
Flying enough in May. Or
On
no, I'm thinking
Delta.
next fall when you had to do two classes or two retire meets, et cetera. So anyway, but the bottom
You're
line here is
keeping me too darn busy. But
Money 30 has been
podcast,
very
Money
popular
30.
because it's relatively short. It has a quick lesson. You learn something every single time, and boom, it's out there. So I think it's absolutely terrific.
All last week, Money 30 was in the top. Oh my gosh, folks, you got to help me out here. In fact, since it's been out, Money 30 has been in the top 40 podcasts, investing podcasts. It's 54 right now. 54. I've slipped.
The
And
indignity
what
of it
bothers
all.
me, one of the Money 30 podcasts was on this. I went through the top 20 podcasts and did like a 15-second review of each one of them.
Financial.
Investing.
Yeah,
They're
okay.
under the investing category. The first one is Dave Ramsey, which it's not, his investing advice is terrible. Then there's a guy named Tim Ferriss. He's a motivational speaker.
Yeah,
There's really
I know
no
he is.
investing there.
Yeah.
Then there's a woman who talks about socially responsible investing. Then there's this guy, Warrior Wealth guy.
Don't know him.
This is like a guy who's jazzed up on steroids or testosterone. He's like Mr. Macho Dude. And then we have like a ton of blockchain things, Bitcoin things, and real estate scams in the top 20. It's ridiculous. 855-935-TALK. Give us a call.
Tom and Don are talking real money.
In addition to the Talking Real Money podcast, I also do another podcast that's very popular over at Apple Podcasts. It's called Money 30. Every day I try to educate and inform you about money in a brief 2 to 4 minute podcast. So check them out at Apple Podcasts or all the other podcast services or at money30.com.
Your guides to a really great financial future. Tom and Don are talking real money.
855-935-TALK, 855-935-8255. Give us a call. We will help you out with money matters of all kinds, particularly investing, although we can't promise to make you a billionaire like Billions, the TV show that Tom and I watch.
Yeah, I do enjoy that show. By the way, I want to thank Ray for writing us saying your show is Talking Real Money. Get it? And he says Bitcoin is fake money and is always great show. So thank you, Ray. Appreciate you.
Oh, thanks, Ray. Thanks so much. I noticed that on Billions, they're putting real billionaires in it now.
I know. They have Mark Cuban on.
Mark Cuban.
Yeah.
Let's have her. Donald Trump, I hear, it's coming on next week.
Gosh.
Oh, wait, no,
please,
fake billionaires.
Please. No, and did you know the other guy after Cuban? I didn't know who that was.
Was he real?
I didn't know. I know. I told my wife, I stopped and I go, I know Mark Cuban, of course, but I don't know this guy. Maybe he's famous too.
I think he was a character.
Okay.
I think he was a character
right.
because he was talking about, I don't know. I could be wrong.
I'm not a huge
Anyway,
Mark
it's
Cuban
an interesting
fan.
show.
Yeah.
It isn't. And good news for all actors. You don't have to worry about Mark Cuban taking jobs.
Okay. Oh, that's...
He wasn't very good.
No, he was a little
but
stiff. I mean, you compare it to these people that do this for a living and do it very well. I mean, the guy who's a star, I forget the guy's name, who's the lead bad guy in Billions, and he's very, very good at it.
How do you know which is the bad guy in Billions?
Because Giamatti's trying to do the right thing,
but
kind of.
No, is he?
I know.
He cheats
he's
at
dirty.
everything.
Yeah, he's dirty. Yeah, he's dirty.
Who's the villain?
Okay.
Who is the villain,
Fair enough.
really?
Fair enough.
855-935-TALK is our number. And now we go to Tim. Hello, Tim. Welcome to Talking Real Money.
Hi, Tim.
Hey, guys. Hey, you got a great show. I think you've done a great job out there. But I'd like to get your opinion and where some good resources are for allocation, early retiree, looking for some good allocations. I'm currently 50-50 laddered bond portfolio, but I'd like a better opinion on where to put that money.
Can I add something before we even get into allocations? First, before you start figuring out where you want to allocate it, you really need to find out how you should allocate it based on your personal tolerance and need to take risk. Because you notice I threw the word need in there. And I'm going to let Tom elaborate on that because that's part of the formula that people neglect. You go to Vestry.com and take our risk quiz. It is free. There is no obligation. There's no sales pitch, no nothing. That's going to tell you what your risk tolerance is because it's a very sophisticated test. But risk need is something we don't talk enough about.
Yeah, Warren Buffett said it recently. Why take risk with money you need to make money you do not or may not need? So I think when you tell us 50-50, I'm assuming you're saying half of your money is in stocks, half is in fixed income, correct?
Correct.
Okay.
And I pretty much have a risk allocation. I've done the tests, pretty much understand my risk tolerance. I don't buy and sell. I hold, as you guys suggest. And I'm just looking for, the old historical, some of the...
Well, what rate of return then do you need to make on your portfolios to sustain yourself in a very lengthy retirement?
Well, with inflation, I'm thinking I need a 6% return, and I can do it on a 5% return. So I'm not looking to hit a home run. I'm just looking to basically get a good reduce the risk in the portfolio by allocation, and I guess.
That's and there you go.
That's 50% of my portfolio.
That's a great idea, and we've done a lot of work in this area, along with a lot of people that we respect tremendously, and there is an incredible body of evidence that says that you can reduce the volatility, and that's how we define risk, really, in anything that's well diversified. The word risk should be thrown out and replaced with volatility, because volatility is all you really face. Risk means you could lose it all. You can't if you're well diversified. So there's a lot of evidence that shows that slightly overweighting value stocks improves not only potential long-term returns, but potential long-term volatility. Slightly overweighting small company stocks does the same thing, and not doing, we in this country and other countries, by the way, I'm going to New Zealand. I was looking at the average portfolios in New Zealand, and they're like 89% New Zealand stocks.
Globally true that people have a home field advantage, home bias.
You need international.
So tell us, of the 50%, how many equities do you think you hold in the half of the money that's in stocks, roughly?
I have, half a dozen. I'm a Dodge.
Whoa.
Contra type. Low fees.
Half a dozen funds. Half a dozen funds, Tom.
I heard half a dozen stocks.
No, because he said contra fund.
Okay.
So he has active management.
This is the devil's in the details, because you really got to dive. Contra fund is basically Standard & Poor's 500 with a little bit at the edge. Managed fund. A little more expensive. Wouldn't be one we pick. We would have to sit down and look at the 12 funds that you have to determine how much you have in bigger stocks, how much Don just pointed out that smaller companies have made more over time. Value companies, so somebody'd have to get in and really dive into that. I mean, do you have emerging markets value? Do you have real estate investment trusts in the U.S. and
not that
international?
You need them, but it helps.
About 15% in international, and then value and growth. But it's the hard determination, unless you go to Morningstar and put it into their allocator, you can get a better feel. But I'm looking just for some good sites that would give you good advice on allocation models for early retiree.
I'm going to let Don take that real quick, Tim, but first I'm going to say that all of the evidence that I know, everything that I've read, all the numbers I've seen, and Don pointed out this has been tested by people far smarter than us, shows that having half of your money in the U.S. and half outside of the U.S. has decreased volatility and actually meant improved returns over a very long period of time.
Actually, right now, the number is about 52% U.S., 48% international, so roughly 50-50. Just a couple of real quick points. One of the things you really ought to do is you can go watch one of our classes online at talkingrealmoney.com. or on YouTube. I do a class on allocation. That's going to help you a lot. You need to get out of actively managed funds, period, exclamation point. For example, Fidelity Contra performs a lot like an S&P 500 fund, but it costs 0.75% per year, where you can get an S&P 500 fund for 0.7 of 1% a year.
Right.
So you're chasing managers when there is no evidence that managers win. There is an incredible amount of evidence that value is a little better, that small cap is a little better, that having that international allocation, if you want to reduce your volatility and potentially increase your returns, is a lot better. But go watch that video. After you're done with that 1 hour video, I think you're going to have a better feel for what you really need to do. Thanks so much for the call, Tim. We really appreciate it. 855-935-TALK is our number.
Tom and Don are talking real money.
If you're sick of investing through an insurance agent or a stockbroker and you're in the market for a fee-only advisor who charges truly low fees and uses a scientific approach to building portfolios for your risk tolerance and need, you should check out Vestory. Tom and I started this firm, and it is devoted to educating everyone, total transparency, clarity, low fees, and great service. If you're looking for an advisor, you ought to at least take a look at us at Vestory.com. That's Vestory.com. Or give us a call, 800-386-3004.
For your real life and real future, Tom and Don are talking real money.
Glad to have you with us. 855-935-8255 on Don's Farewell Show. Thanks for tuning in. We find him speechless. Oh, okay. I know.
I want to clarify.
That's
the Fidelity Contra Fund is actually more. It's more like the Russell 1000 as opposed to the S&P 500. So it's a little bit more aggressive than the S&P 500.
And does it have a value tilt to it at all? I can't remember, but
I believe
expense
it
ratio.
does.
I mean,
I got to pull it back up because I went
it's had a
someplace
good track
else.
record. I know that.
No, it actually has a heavy-duty growth tilt.
Okay. So, I mean, I'm guessing if we went and looked at Tim's portfolio, you'd say, I have 12 funds. This happens a lot.
But it's all large cap growth.
And that's what, and it's mostly U.S., it's mostly big companies, and it's mostly the growthy firms. And by the way, right now, I bet it's way over allocated to that one sector that killed you in 2000 called technology, because technology, as you may know, has gone up and up and up and up. So people own a lot more of that than they realize today. I'll put it that way. So
let's see. Yeah. Well, in terms of Contra, you're absolutely correct. 35% of Contra, 35% is in tech.
And that's what worries me, too, because people get a false sense of security that you're diversified in that fund. Not so much, because even if it did hold 1,000 stocks, which I doubt it does,
it holds 318.
And most of the money ends up going in these large growth funds to, none of this will surprise you, company called Amazon, company called Google, Microsoft, Apple. I bet they take up a lot of the capitalization.
Shall I read you?
We got somebody waiting, but go ahead. Yes.
Well, hold on, I'm going to read you these. We'll get to the call here in a second. Facebook, number 1.
Yep. I forgot.
Amazon, number 2. Berkshire, number 3.
Okay.
Alphabet, which is Google, number 4. Microsoft, number 5. Alphabet Class C, number 6. United Healthcare, number 7. Apple, number 8.
I hate it when I'm right. I just hate that. I really do.
Nailed it.
You can go to my place tomorrow morning and ask my wife how much I hate being right all the time.
Oh, wait, there's Netflix.
Oh,
there's Adobe.
Yeah.
There's Activision. Holy cow.
Sound familiar at all? Yeah.
855-935-TALK. Oh, Tesla. Tesla's in the top 20. 855-935-8255. Justin, you're next. Welcome to Talking Real Money.
Hi, I'm basically 35. I've put away zero for investments, and I'm starting to think about doing that now with a new job since I've graduated college, and I want to start investing. So I'm kind of
perfect time to start.
Yeah. I basically want to know where to start.
Well, so does your company have a retirement plan?
Yeah, they have a 401k, and I just started the company stock purchasing thing, but should I just go with a company 401k or start trying to do it myself?
Well, did they have a match?
Yeah.
Okay. Well, I mean, at the very least, I would save up to the match to get the full dollar amount there, because that's free money, right?
Yeah.
Okay.
I think it's like 6%.
Hey, that's
good.
a generous match.
So are you putting 6% of your earnings into the 401k?
Basically, I'm either this month or next month I'm going to start doing that. So I was
All right.
figuring
You said you were doing the stock purchase plan?
Yes, and in addition, I'm doing the stock purchase plan.
I wouldn't do it that way. I would make sure I get the 6,
backward.
and then probably after that, I would go do, and depending on your income, maybe do a Roth IRA after that.
Yep. That's the order. Here's the order in which you should invest for your retirement. 1, all the money in the 401k up to the match. Once you've reached that, because 401k investments tend not to be as good as you're going to create outside in your own Roth IRA. Then, in fact, the company's stock purchase plan would be about 38th on my list.
Yeah, way down
unless
there.
they're giving you a huge discount. Then, number 2 is a Roth IRA. Do it with Vanguard. Get into the VT. Fund it regularly. Fund it to the max. Then you can invest in other things. But get those 2 done first, and then go to 401411.com to figure out how to allocate your 401k.
Tom and Don are talking real money.
Keeping the podcast breaks as painless as possible is my goal. That's why I want to very quickly tell you about the only magazine I've ever heard of that is 100% real investing all the time. There's no business news, no speculative advice, and certainly no lifestyle stuff. It's called Real Investing Journal. I publish it every quarter, and you can get 2 full years for only $25 at realinvestingjournal.com. That's realinvestingjournal.com.
Reality radio for a really great future. We're talking real money.
Because this part of your life is really important, and one of the biggest problems is so many people get investing so horribly wrong. Because the vast majority of the advice given out there is good advice. It's just almost impossible to find. 855-935-TALK is our phone number. That's 855-935-8255. And it is so important that you remember some of these rules that we're telling you about. For example, do you remember, how many of you remember the 2000s? Do you remember what they were called?
Back then, I remember that, Don.
You remember
it was
what
called
they were
the
called?
Lost Decade. The Lost Decade. Now, for me, by the way, the Lost Decade was really the 70s, but that's another show and another day and time for all that. So
that's not a show. We don't want to hear it.
No,
mine or yours.
I agree.
Neither of them.
I agree.
Yeah.
So the reason they called it the Lost Decade is because in the 2000s, the Standard & Poor's 500, the 500 large companies we were kind of just talking about in the last segment, those
500 large U.S. companies.
Yeah.
U.S. companies.
Yeah, we just mentioned a large portion of the S&P 500 is made up of a handful of companies. When you look at the market capitalizations, the one we just mentioned, that particular index over 10 years, I believe, was about flat. I don't think you made anything.
It was down.
Okay,
it was down slightly.
That's
just
a long
about 1%.
time.
It was about 1% for that entire 10-year period. And bear in mind, folks, those are the 500 biggest companies in the United States of America. But what if you were internationally diversified?
And if you had small and value companies as well, because over that same decade, same time, same stock market.
Exactly same 10-year period.
Exact same period. You did great, I think it was about 5% a year. I'd have to go run the number to get exactly, but we can do that. But the point is, not all stock markets, and you do a nice job of this when you do your morning reports on KOMO, of pointing out there are times when European stocks are doing okay, but U.S. stocks are getting crushed. There are times when Asian stocks are falling, but the U.S. is doing well. Not everything moves in lockstep. And what I wanted to finish the thought on is, as you pointed out, when you go to New Zealand, pretty much everybody in New Zealand has their money invested in New Zealand. And if you go to Japan, by the way, and this has been a huge penalty for people in Japan, the number there is over 90% of the investable assets are invested in Japanese stocks, and they're underwater, I believe, still for the last 28 years.
Yeah.
That's a long time to wait to go back to zero. I mean, and so being diversified, as I pointed out briefly, has meant less volatility because your portfolio's in different markets that are doing different things at different times, and it's actually added a little bit to the return over time.
Let me give you some numbers.
Yeah.
These numbers are going to be massively powerful. If on January 1st of 2000, you went into the new decade, the new millennium, as some said, but it wasn't until 2001, really. You went in with $100,000 in your portfolio.
Yep.
At the end of exactly 10 years, December 31st, 2009, your $10,000 portfolio after reinvestment of dividends that whole time, by the way.
Got to put the money back in. Yep.
Was worth $91,000.
You said 10,000 to 91.
No, 100,000. I'm sorry.
Okay.
100,000 to 90,000. 100,000 became $91,000. If you instead invested globally, same exact period, $100,000, small, large, U.S., international.
Didn't have to pick stocks, didn't have to time markets.
Didn't have to do a darn thing.
Yeah.
You just sat there during that miserable 10 years.
Everybody was telling you to get out of the market, too, by the way. In 2000, 2001, and 2008, you had to tune all that out because it was out there every day.
You just sat there.
Yeah.
At the end of 10 years, you had $194,000.
Wow. That's a significant difference.
That is almost a 100. Well, no, it is. It's a $100,000 difference.
And yet, so few of you.
And you didn't have to do anything.
I know, so few of you. And I will say this because, as you know, Don, I look at 2 or 3 portfolios a week from people that walk in the door.
Yeah, and he's the CEO, so he doesn't look at a lot of them.
They think that I'm not laughing. I'm only laughing because it's true. For the most part, you believe you're diversified by being in the S&P 500. If there's nothing more powerful than that decade you just gave us to say, maybe I should look at some of these international stocks, I don't know. It'll change your mind. I really have no idea.
Again, the difference is you invested globally and you had some small in value versus having just large company U.S. stocks, and you would have had twice as much money. Over twice as much money doing nothing. Doing nothing. 855-935-TALK is our number.
Tom and Don are talking real money.
We mention 855-935-TALK, 855-935-8255 throughout the podcast. But you need to know that you can call that number 24 hours a day, 7 days a week. Leave your question, and those will be answered in special Talking Real Money podcasts that will appear on this particular site in the future. So give us a call, 855-935-TALK, 855-935-8255.
Your guides to a really great financial future. Tom and Don are talking real money.
855-935-TALK, our number, good 24/7. You can call us anytime, and it also switches over to KVI to our next hour, so you can keep calling 855-935-TALK, 855-935-8255.
That is AM 570. We're going from 1,000 to 570 on your dial.
Yeah, we slide right down the dial. Actually, they're putting in the studio. They're putting a slide in.
Not for me, because I don't like that stuff. I know how it ends.
This is hysterical.
Well, yes.
I was looking at seats on Delta because that's when I'm flying.
Yeah,
most of the time. And in the main cabin, you get like complimentary entertainment and complimentary.
I think Delta. Yeah,
coffee.
they're good. Yeah, I did them last trip to New York.
But then you go up to Delta Comfort. And it goes, bigger screen, all this. And it says, get this. This is a differentiator. Attentive service from a Delta flight attendant.
We did the Delta Comfort on the flight to New York and back, and the service was terrific. The food, I hate to pick on Alaska because, I've been a customer there
forever.
And a mileage, whatever, guy, gold, all that stuff. But I think Delta's doing a good job. Really.
Well, and then in first class, you get a dedicated flight attendant and an 11-inch screen.
Well, and they make me walk very quickly through first class. You got to
move right along.
I can't even pause there.
And then I'm going to fly Emirates from
they have
New
a
Zealand,
great reputation.
From New Zealand to Australia, and they have in economy. They have a 17-inch screen in the seat. That's like the equivalent at that distance of having about an 80-inch big screen sitting in front of you.
I agree. Yeah, that's cool.
I mean, you get that in economy. I'm really excited. I got to tell you, one of the things I'm most excited about on this silly trip is flying Emirates.
I'll be
just because I've always wanted to do it.
They have a terrific reputation. Let's put it that way.
Yeah, we'll find out. I'll review them when I get back.
Please.
Let's see. I think it's Sally's turn. Hey, Sally, welcome to Talking Real Money.
Hi, Sally.
First of all, you'll love New Zealand. It's a beautiful country.
I know I will. I'm so excited.
I've been listening to you for a while, and I know that you are very opposed to annuities. Mm-hmm. And I'm wondering why. I'm 77 years old. I do have some, not all, of course, but I do have some because I do like the fact that it is, quote, guaranteed, unquote. But I'm wondering why you're so opposed to them.
Different kind of annuity first. Okay, the annuities that we're really horribly opposed to are indexed annuities and variable annuities, the kinds that pretend to be investment vehicles. You are probably an immediate annuities. Are you taking an income from your annuities?
Not yet, no.
But you can, correct? You can annuitize them.
So, I mean, part of this is, again, as we discussed last hour, the devil's in the details. We'd have to see the annuity. We'd have to see how much you're paying in the annuity. We'd have to see what sort of guarantees, how much, what kind of riders you have. But in a general sense, the reason that we don't use them, we don't recommend them. They're very opaque. They're hard to understand, generally, because people bring them in, we look at them. They're expensive.
Having said that, Sally, they're in some portfolios, when you are actually in retirement, there may be instances because of what you just said. They're guaranteed and there is a certain amount. You know how much income you're going to get. That part, correct, that immediate income guarantee, for some is fine. Just not one, never for all of your money. Because bear in mind that when you annuitize, you've given the money away. It is not yours or anyone else's ever again.
Correct.
But for some, that certainty is essential for a portion of their portfolio. I just want to make sure that people understand that those who sell these things are not your friends. They are highly compensated salespeople, and there are less expensive products. I want people to shop for annuities like they shop for a car.
Okay.
Or better.
Okay.
Because most of them are sold to people rather than people shopping, as Don said, traditionally.
Mm-hmm. Right. Okay.
Okay.
All right. Well, terrific. Thank you so much. I appreciate it.
Thank you, Sally.
You're very welcome. Thanks for calling.
The problem is to just blanketly say annuities are bad is hard. The majority of them are not in they're not going to work in your favor. And by the way, even if you give the money to somebody and they're paying you back at a small interest rate, the guarantee part, you're paying for that somehow, right? It's not a free lunch. So you feel good, because I'm getting my money back with a small interest rate and I get it every month, whatever it is, an immediate annuity. You're paying for that privilege. That's all.
And another problem with immediate annuities is the gimmick of income. They will say something like, you're going to get 6% on your money every month, but you're not getting 6%. Part of what you're getting is your own money coming back to you.
And what people hear is, I'm making 6%.
Right.
You're not making 6%. You're getting some small amount of interest from the insurance company.
You may be making
your money.
3 or 4.
Yeah, most of the time.
And your money.
And your money. So that's the part. It's trickier than all that.
And I want to just repeat, my biggest issue with annuities across the board is the people who sell them, because they're so blasted well compensated for the sale. They're not compensated for an education.
Nope.
They don't get paid to help you. They get paid only when they sell you something. 855-935-TALK, always. You can call that number always, so call anytime. And Terry, you're up next. Welcome to Talking Real Money.
Hi, Terry.
Hi, good afternoon. How are you guys?
Good. Thank you for calling us.
I just had a question. I've been listening to you for probably months, and every Saturday I never write down the is it a Vanguard International Fund or something?
No, actually, so on the stock side, the equity side of your portfolio, we recommend that you can own one fund. You can do it in a mutual fund form or an ETF. If you buy it as a mutual fund, it is VTWSX. Vanguard Total World Stock Index.
Sex Fund. Oh, wait, no. That's how I remember it.
That's on the other channel.
SX.
I'm sorry, VTW
S as in Sam, X as in X-ray. VTWSX. That's the mutual fund. You can own that the same way as an ETF, and there it's just V as in Victory, T as in Tom.
And he loves saying that because his name's Tom.
Yes, makes that easy.
V as in Victory, ETF. Okay.
Yep. Yeah. So you can own it either way. There you get almost 8,000 stocks, globally diversified, at an exceedingly low cost. And as Don just pointed out, by having global exposure made a huge difference in that. It makes a difference over a long period of time, but especially in the lost decade, wow, what a nice place it was to be. I mean, a very important part of investing.
Okay. All right. Well, this is wonderful. So I'm going to race home and look at my computer and buy some of these guys. I appreciate that. Thank you.
You're very welcome. Thanks for the call. 855-935-TALK. 855.
Hey, I want to mention. Yeah,
what?
We're going to be over on KVI in a few minutes, but I want to mention before we're off the air here on Como. It's just a few weeks away. It's hard to believe they're going to be doing Retire Meet North up in Everett.
Yeah.
Get your tickets now because we don't have that many left. Paul Merriman's going to be there. Rick Gregorick's going to be there. You're going to be there. I'm going to be there. Herb Weisbaum's going to be there.
We're letting Paul Merriman back?
Yeah, we had to. I still owe him a lot of money.
Is that in the contract?
So,
I figured.
So join us. It's going to be a great day. Go to retiremeet.com. Retiremeet with 2 E's.com.
Tom and Don are talking real money.
If you need help allocating your retirement plan at work, you can get free help at 401-411.com. That's 401-411.com.
For your real life and real future, Tom and Don are talking real money.
And those tickets for Retire Meet North in Everett are going very, very quickly. I believe we are at 30. We may be a little below 30 now. So it's going to sell out. So if you're going to come to Retire Meet, and by the way, you'll get the class on how to build that portfolio along with a lot of other great stuff and lunch and breakfast. And it's very reasonable. So go to retiremeet.com to get those tickets right now. That's retiremeet.com. One word, retiremeet.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.